Good afternoon, everyone. Welcome. My name is Lucy Ehrenclew, and I am the Existing Buildings Programs Administrator with the City and County of Denver. I'm excited to present our second webinar of the month. We're going to be talking about paying for commercial building upgrades using a program called CPACE. So just some logistics, some housekeeping here. Everybody is muted, and we welcome questions in the Q&A box or the chat throughout the next hour. We'll answer those questions after our speaker presents today. And then lastly, our recording is going to be posted on the High Performance Buildings and Homes Library, as well as sent out to all of the registrants in the next week or so. So this is our webinar library. You can register for upcoming events here, watch past webinars, see other resources. We just posted our Boulder Commons case study that we did 2 weeks ago, which was a great webinar as well. If you would like to see a topic covered in a webinar or you want to speak at a webinar, please fill out this upcoming or this suggest an idea survey here and let us know. I'll put that webpage in the chat just after a little introduction here as well. And then just a reminder, we do have our Energize Denver Awards. The applications are due on Sunday of this week on the 31st. We're celebrating buildings that are leading the way to reaching a net zero energy building stock by 2040. And if you have worked with, you own, or you manage a building that is high performing, energy efficient, all electric, or partially electric, please apply to receive an Energize Denver Award for 2022 in one of the 4 categories you see here. And like I mentioned, again, they're due on Sunday. I'll put that link in the chat as well in just a few moments. There we go. All right, so I want to introduce our speaker here. We're joined by Tracy Phillips, who is from CPACE. Tracy is the director of the Colorado CPACE program. He is a certified energy manager, certified demand side management professional, a certified measurement and verification professional, and he has a master's degree in physics. He has 25 experience in commercial building efficiency, and this includes energy auditing, retro commissioning, measurement and verification, master planning, sustainable design assistance, program management, and third-party technical reviewing. He is currently serving as the chair of the IPM VP committee and is a member of the Colorado Building Performance Standards Task Force, the Grid Services M&V Working Group, and is the former technical director of GBCI's Investor Confidence Project. And with that, I'm going to hand it over to our speaker, Tracy.
All right. Thanks, Lucy. I'm going to take over the screen here. All right. So yeah, thanks, Lucy, for that introduction, and welcome everybody. I appreciate the opportunity to talk to you all about the Colorado CPACE program. I'll start with an overview of what the program is all about. So legislation was passed back in 2015 to enable a form of financing here in the state of Colorado that's called CPACE. And the program was launched shortly after that in 2016. So CPACE is a statewide financing program, and it's designed to finance energy efficiency, renewable energy, and water conservation improvement projects for existing buildings. It could also be used to help finance efficient new construction buildings as well. So the program was enabled and created a district. We call it the New Energy Improvement District, or NEID for short. And it covers the entire state, as I mentioned. But each county has to opt in before we can start financing projects in that county. So I'll talk more about all of this in just a little bit. The funding for the program and the financing for all of these projects comes from private capital. So there's no state money or federal money or grants or bonds. The program doesn't rely on any other forms of financing. It all comes through these private lenders. And the Colorado Energy Office is the program state sponsor. So The Energy Office sponsors the program, and then there's a board of volunteers. There's 7 members on that board appointed by the governor that sort of oversee the program at a high level. And then myself and my team, we manage the program. So what is CPACE financing? So CPACE was created to offer building owners a different way of financing improvement projects for their buildings. And so there's 3 components that make CPACE very different than other forms of financing. So these are the 3 critical takeaways for all of you. So the first is it's 100% financing. It'll cover all of the hard costs and the soft costs associated with a project. The second is it's long-term financing. So you can do a finance term up to 25 years. So that right there is very different than a traditional loan, right? A traditional loan, you're usually expecting to come out of pocket 20 to 30%, and the finance term is usually around 5 to 7 years. This is nothing out of pocket and finance it long-term up to 25 years. But what really makes it unique is the mechanism that's used for the financing, which is a special assessment. So the CPACE assessment, it works just like any other assessment that might be placed on a property, like a sewer assessment or a sidewalk assessment. The idea behind doing it that way is, as an assessment on the property, it stays with the property. It rides with the land, so to speak. So if an owner were to sell their building down the road, they have the ability to hand off the payment obligation to the next building owner. So the financing is attached to the building itself and not to the building owner. It's non-recourse. There's usually no personal guarantees associated with this financing. So because it's a special assessment on the property, the payments are made through your property tax bill. So once a year or twice a year, whenever you get your property tax bill, that's when the owner will make their CPACE payment to the county. And then the money goes from the county to the program and then to the lender. So that's sort of the mechanism. That's how it works. A lot of these projects are designed to have the energy cost savings outweigh the annual payments, but that's not a requirement. So I come from a performance contracting background where that was critical. We had to have the energy cost savings be greater than the payments. That was the whole idea of that performance contracting model. So a lot of projects strive for that, but it is not a requirement. So we have a lot of projects where the project saves energy and has a cost savings associated with it, but it doesn't necessarily outweigh the payments, and that's okay. And that's great because it opens up the ability to finance a lot of improvements that may not have a great return on investment, but the owner still needs to get it done. And it does have a utility cost savings component, like a new roof or new windows. These have a really long payback in terms of energy cost savings, but they could be critical. So those are a great sort of fit with CPACE. What's eligible? Well, the C in CPACE stands for commercial. Everybody always thinks it's Colorado. It's not, it's commercial. So any commercial, industrial, or agricultural building is eligible for financing. You can see the list on the left there of typical building types. People always ask me about nonprofits because they don't pay property taxes. How does this work for a nonprofit? Well, nonprofits have assessments placed on them just like everybody else, and that way they're no different. So CPACE actually works seamlessly with nonprofits, and we've done plenty of nonprofit projects, faith-based organizations and YMCA, senior living facilities. So nonprofits are a great candidate. And multifamily, if it's 5 or more units, it's considered commercial multifamily. So like an apartment complex would be a great candidate for CPACE financing. And then the eligibility requirement is anything that reduces a building's utility costs is eligible for financing. Doesn't matter how much it saves, and it doesn't matter the return on investment. It just has to demonstrate a utility cost savings, and then it's eligible. So you can see that's a pretty broad umbrella of improvement types that can be financed through CPACE. All your typical, heating and cooling equipment and lighting and controls and chiller plants and boiler plants and all of that. Anything to do with the envelope, new windows, a new roof, better insulation. Water efficiency, of course, reduces your utility costs. So low flow plumbing fixtures, we've had projects do smart irrigation systems. The one oddball on the right here is electric vehicle charging stations. Those actually use energy. They don't save energy, but they're considered in the spirit of what the program is trying to accomplish. And so EV charging stations are eligible for financing. And we've been recently looking at a lot of beneficial electrifications projects. So converting buildings to all electric systems, right? Heat pumps or variable refrigerant flow systems. So it's a pretty broad range of improvement types. Not only are the improvements eligible, but anything related to those improvements or to the project, those costs are also eligible for financing. So if you have to do an energy audit or any kind of engineering design work or architectural work or anything like that, all those fees are considered related and eligible for financing through CPACE, as well as any hard costs related to the improvement. So let's say you're doing a roof-mounted solar PV system and you have to do a structural upgrade to support the new solar PV system. The cost of that structural upgrade is considered related to the solar and is eligible for financing. Or if you had to do an electrical upgrade, let's say, for that solar PV system, same thing, those electrical upgrade costs are eligible. Or you had to do asbestos abatement associated with a boiler retrofit. Those abatement costs are eligible for financing through CPACE. So again, it's truly meant to be 100% financing, no out of pocket to the building owner. So that's for existing buildings. When they launched the program in Colorado, they introduced new construction financing. So we were the first program in the country to adapt CPACE to new construction financing. And the way it works is pretty straightforward. A project can receive between 15 and 20% of the total construction costs through CPACE. To qualify for 15% of the total construction costs, a building needs to be built to the 2015 Energy Code. So in a lot of jurisdictions now, they require buildings be built to the 2015 Energy Code. So a lot of them are sort of already eligible for at least 15% of their total construction costs through CPACE. To be eligible for up to 20% of your total construction costs through CPACE, a project needs to demonstrate that its energy performance will be at least 5% better than the 2015 Energy Code. So, and that's usually demonstrated through an energy modeling effort. So you develop a model of the proposed design and then a model of the code compliant version of that building to just meet 2015 Energy Code. And as long as the performance of the design is at least 5% better than the code compliant version, then you're eligible for that 20% financing. And so why is this powerful? So on the left is sort of a traditional capital stack for new construction. So usually the majority of the financing for a new construction project will come in the form of a construction loan. And so that's usually lower interest rate money, in say 3 to 6% interest rate, but that'll make up 60 to 75% of your capital stack. But then the developer needs to come up with the remaining part of the capital stack. And they almost always need to make an owner equity contribution, right? And so that'll be, let's say, anywhere from 15 to 20% typically of the capital stack. But then there's a gap there, right? There's anywhere from 10 to 20% of the capital stack that needs to come from somewhere. And usually, forms of that financing are higher interest rate money, like a mezzanine loan is very typical for projects like this. And it comes with an interest rate usually around 9 to 15%. So the idea is if you can replace part of this capital stack with CPACE, what we've been seeing usually comes in around 5 to 6% interest rate. So if I can replace, say, 15 to 20% of this capital stack, the more expensive capital, with CPACE at 5 to 6% interest rate, this is game changing to a lot of developers. This can be incredibly powerful in terms of what you can do. in terms of not having to value engineer out all the great design elements of a project. That's really one of the intent of CPACE with new construction is to enable that. Well, a couple other things I'll mention. Retroactive financing is available, but only to new construction or gut rehabilitation projects. But for any projects that were built within the last 2 years, new construction or a gut rehab project, those can still utilize CPACE financing. So it's 2 years from the certificate of occupancy. So if you did a project in the past and realize, oh, I wish I'd used CPACE, it might not be too late for some of those types of projects. And then projects can be refinanced too. So let's say interest rates down the road change, you do have the ability to refinance CPACE assessment lien with either the lender that originally provided the CPACE financing or even with a different CPACE lender. So you can always do that. I'll take a step back and just give you a little perspective. So we didn't create CPACE in Colorado. It actually started about 12 years ago in California, PACE financing. And since then, it's propagated to 29 states across the country. I think last time I looked, there's over 50 different CPACE programs currently active across the country. And you can see over the last little over a decade, there's been more than $3.5 billion invested in CPACE projects across the country, well over 4,000 buildings nationwide. So it's definitely really grown considerably from where it was. And this, if you look at the bottom left of my screen, there's an organization, PACE Nation. If you go to pacenation.org, they have a list of every CPACE program in the country and a link to their website. So if you do have, if you operate in states outside of Colorado and are considering using CPACE there, that's a great resource to check out. Specific to Colorado, I mentioned it's a statewide program, but each county has to opt in. They have to pass a resolution and sign a participation agreement before we can start financing projects in that county. And so I'm very excited. We're actually now up to 40 different counties participating in the program. This represents more than 96% of the building stock is now in a county that is participating. So if you do have a building or a development in a county that's not participating yet, the best thing to do is just reach out to me and let me know. Usually if I have an owner or a developer that's interested in CPACE, that can help me get the attention of the commissioners so that I can discuss CPACE with them and talk about hopefully getting them on board. So I want to talk about the potential for energy efficiency projects. So Rocky Mountain Institute actually developed this paper on Class B and C commercial buildings to give a sense of the average energy savings and cost savings potential for buildings and what's the draw for building owners. So you can see from their report, if a building just sort of tightens itself up, right, does no cost or low cost improvements, on average, they can save about 15% or more on their utility bills. When you look at capital improvements, which is what CPACE is all about, then you're talking more like 35% or more in terms of utility cost savings for that building. So that can be really powerful, and it translates into metrics that building owners really appreciate. So the report showed that as a result of these types of projects, the net operating income of their buildings will usually go up between 2.4 to 5.6%. So that can be very compelling to a building owner. And of course, the property value is going to go up as a result of these projects. And on average, that's between $5 and $11 a square foot. So again, these are the kinds of metrics that can speak to building owners. When we talk to a building owner about a project and we present the financial projections for the building and for the project, these are some of the key financial metrics that we include that really help to make the case to an owner to go do these energy efficiency projects. Okay, so I'm going to talk a little bit about who's involved with developing a CPACE project. So of course, there's the property owner. This could be an existing building owner, or it can be a developer. And the first step, if they're interested in using CPACE, is to submit what we call a pre-qualification submission form. That's the application. So as soon as we get that, then that'll get all the wheels in motion. Then from that point, the owner develops their project just like they normally would. So they can work with any contractors that they want to, or architects or engineers. They figure out what improvement projects they want to do and how much they're going to cost and how much it's going to save. And then they send that all into the program so that we can review it and show them financially what the project's going to look like. Then they select a CPACE lender, which I'll talk about more in just a minute. And then they execute the financing agreement and we move to the closing. So it's a pretty straightforward financing process. So because of the nature of CPACE, because it's an assessment that gets placed on the property, it takes priority ahead of the mortgage. Any assessment does. And so the CPACE assessment is no different. So what that means is if there is a mortgage holder involved with a existing building, and there usually is, or if it's a construction lender with a new construction project, the mortgage holder needs to provide consent. So they actually have to sign a document that says, yes, we know this building owner wants to use CPACE financing, and we're saying that it's okay, and we're going to sign this document saying that it's okay. And so you'd say, well, why would a mortgage holder agree to this? Well, the reason is there are benefits of this type of financing and these types of projects to the mortgage holder. So in the bottom half of my slide, you can see, as I mentioned earlier, the net operating income of the property is going to go up as a result of this project. So banks love that, right? They like that NOI is going up. I also mentioned that the property value is going to go up, usually significantly. And so again, that's the bank's collateral. They really like when the building value goes up as well. The key for them, though, in terms of risk analysis, is that the CPACE assessment is non-accelerating, meaning if there's a default scenario, the CPACE assessment does not come due. It continues to ride with the property, like I mentioned earlier. So it's only any payments in arrears that have been defaulted on that are still due. It's not the entire CPACE amount. So usually that level of risk is incredibly low for the mortgage holder. And so because of that, we've had tremendous success with banks approving these projects, the mortgage holders providing consent. You can see we've had 40 different banks just here in Colorado provide consent, many of them multiple times now on different projects. And in fact, the ones in green, a lot of them actually became CPACE lenders, which I'll talk about in just a second. So it's the same for the new construction projects that we've dealt with. We've had 23 different construction lenders provide consent on new construction projects. So banks and lenders are becoming more and more comfortable with this form of financing. In the early days, everybody sort of looked at me sideways. They weren't exactly sure what this was, but now it's really gained in familiarity and popularity. And so the banking institutions in general have become much more familiar with it and comfortable with it. But then there's the capital providers, the CPACE lenders. These are the financial organizations that are actually providing the funding for these CPACE projects. And so they'll each have their own underwriting process, but there's two main things that they'll always look at. So one is it a good candidate for CPACE? So what is the loan to value for that property? Meaning, what's the relationship of the mortgage to the value of the property? And usually if that's 80% or less, it's a good candidate for CPACE financing. So in other words, if I have a building worth $1 million and I have a $600,000 outstanding mortgage on that property, that's a 60% loan to value. So that'd be a good candidate for CPACE financing. And that 80% is not a rule, but that's usually what they like to see. I've seen loan to value higher than that, but that's a good rule of thumb. And then how much financing are they willing to lend to a building owner? And so that's usually around 30% or less of the building's value. That's usually the cap. Again, that's not a rule, but that's usually what they're comfortable with. So again, if I have a building worth $1 million, I can expect about $300,000 in financing through CPACE. And so we actually have 44 different lenders, CPACE lenders, currently in the program. These are different banks and credit unions and other financing organizations that finance all of the CPACE projects in Colorado. The great thing about having so many lenders in the program, number one, they're competing with each other to finance these projects. And so that helps keeps their interest rates down and their closing costs down. But it also gives us terrific coverage across the state of Colorado so that we can finance projects in more rural communities, for smaller projects, all the rest of it. So, and we're always looking to add to this list. Then there are the project originators, usually a contractor or a developer. And the idea for any contractors, maybe that are even on the call, is CPACE is just another tool in your tool bag, right? It's another financing option. So every contractor I've ever talked to, the best case scenario is the owner writes them a check and then they're done, right? But if they can't do that or don't want to do that, then a traditional loan might be a good fit for them. But if it's not, or even if it is, CPACE might be a better fit, right? It's very different in terms of the 100% financing and long-term financing and the ability to hand off payments to the next owner. So it can be a very attractive and compelling financing option for an owner. So I'll take you quickly through the CPACE process just to give you, and this is a flyer, a handout that we have on our website you can download. I use this for a lot of my meetings with building owners, but just to sort of step you through it quickly. So as I mentioned, it all starts with the pre-qualification submission form that gets filled out and sent in. It takes an owner about 15 to 20 minutes to fill it out, so it's not a big lift. When we get that form, usually if it's an owner that's not familiar with CPACE, then we'll host a kickoff call to go over this process with them, talk through any questions they have and get things started. Then step 3 is, as I mentioned, the owner, the developer, they work with their design team or the contractors. They figure out what the scope of work is that they want to do, what improvements they want to do. They may engage an energy consultant to help with that as well. And they get their scope of work figured out. That gets sent to the program. And then we develop a financial report. So we'll show what the project's going to look like. What are the cash flows, the amortization schedule, all of that. So the owner can see what CPACE financing is going to look like. And then they'll approve it. They'll say, yeah, in step 4, this looks great. Okay. So then once they've approved it, then we'll formally reach out to the mortgage holder, if there is one. And like I said, there usually is, to obtain consent. So a lot of times I'll lead that discussion with the bank. In some cases, it might be the CPACE lender or somebody else that'll lead that discussion. But either way, the mortgage holder will be approached, we'll share the project financials with them, and then they'll hopefully sign the consent. Once they do, then we move to step 6, which is selecting a CPACE lender. And so, as I mentioned, there are 44 to choose from. So either the owner can say, oh, I know this bank, I really like them, I want to work with them. So as long as their terms look good, then that's the lender that we'll work with. Otherwise, we can send it out as a funding opportunity to all of the CPACE lenders. And so they'll review this funding opportunity, and then they'll decide if it's a good fit for them and submit a term sheet. And so again, they're competing. So they'll have different interest rates, different closing fees that the owner can review and decide which lender they want to go with. It's sort of like a lending tree model, if you will. So once the owner selected their CPACE lender, the capital provider, then we move towards the closing. So that's when the financing agreement gets executed, the other documentation gets taken care of, and the closing happens. So I wanted to talk about a couple of tools that we have available on the CPACE website that can help you originate projects or discuss projects with an owner. So one is specific to solar PV projects. It's called the Pacework Solar Estimator. And so again, you can access this on the website. This works dynamically with PV watts to help generate the estimated electricity production of a solar PV system. But then the really neat thing that it does is it shows what the project will look like if you finance it through CPACE. So it's a real quick first impression, show an owner, give them a sense of what a project might look like if they use CPACE. That's for solar. For everything else, we have this new tool called the Energy Performance Improvement Calculator. So again, you can access this from the Colorado CPACE website. And this is, as the name would imply, a calculator. It helps you estimate the energy and cost savings associated with all different types of energy improvements, as well as what they're going to cost. And those costs, installed costs, are based off of actual projects, over 10,000 projects that have been done across the country. So, so it's an incredible repository of data around past projects that helps inform the EPIC tool. And then it provides a financial analytics report, just like the solar estimator does. This one provides a report that the owner can review that shows what the project is going to look like financially using CPACE. So if you're interested in either of these tools, you want to learn more, just reach out to me after the after this webinar, and I can help you out. All right, so let's look at the program and where we are at today. So you can see this is sort of the mix of projects that have been financed so far in Colorado. Over on the left is by dollars funded, and you can see new construction has really found a home in Colorado and is dominating in terms of dollars financed. That's a big part of that is because those tend to be much larger dollar projects. But if you look at the number of projects, comprehensive energy efficiency projects, so multi-measure projects, make up almost half of the projects that are financed through CPACE, and about a quarter of them include renewable energy. So 11% are just renewable energy by itself, they did nothing else, and 15% are renewable energy and something else. A lot of times it'll be lighting or roof, but it could be other things as well, replacing rooftop units, whatever. So to date, the program has financed 105 projects, just over $216 million in financing. You can see some of the metrics in terms of job years created in the state and emission reductions. The project sizes have ranged. The smallest that we've ever done in Colorado is 53,000. The largest, we just had the hearing for it last week, and is 55.5 million. So the 2 points there. One is you can't have a project too big for CPACE. The sky is the limit. There is tons of money that wants to invest in these projects. So money, access to capital is not the challenge whatsoever. If you're curious, the biggest project in the country was a project in San Francisco. It was a $109 million CPACE project. So they can get pretty big. On the smaller side, I usually tell folks $50,000 or less is not a good fit for CPACE. And part of the reason for that is the long-term financing nature, right? You just don't want to finance something less than $50,000 long-term. It just doesn't pencil out very well. So, but $50,000 and up is usually a good candidate for CPACE. The average project size is right around 2 million, with the median around 900,000. Of the 105 projects I mentioned earlier, a quarter of them, or 27 projects, have been new construction. The rest were retrofits. And there's some of the other data points I mentioned earlier. Okay, so I'm going to go through a few case studies, and then I'll be done, and we can do some Q&A. So, but just to give you a sense of some of the projects that have been done, this was the program's very first project. You can see, you know, CPACE is not always just for sexy buildings. It's meant for all buildings, right? And so here's your typical building. There were 7 tenants in this building. The owner wanted to do 100 kW solar PV system and a lighting retrofit. And that's what they did. They financed that. It was just over $330,000 You can see the lifetime cost savings were pretty tremendous for this project. They considered doing the roof as well, and they did replace the roof, but they decided they wanted to finance that outside of CPACE. I think they might have used a combination of insurance money and something else, but in any event, that's always an option for an owner. You don't have to obviously finance everything, even if it's eligible. You can sort of just use CPACE for what you want to use it for. The other thing I'll mention, there were 7 tenants in this building, and one of them was a cannabis grow facility. So anything to do with cannabis is not eligible, unfortunately, for CPACE financing. So in the case of this building, that tenant was just excluded from the project. So there are sort of ways you can navigate that, but that's an important point I want to make. But this is a great example of how a lot of these projects develop. So this was a building in Boulder, a digital marketing and social media firm. They own their office building, and the rooftop unit and the roof both needed to be replaced. They were actually in pretty desperate straits. And so they came to CPACE and said, okay, yeah, we're going to use CPACE for the new rooftop unit and the roof. But what they did is what a lot of owners will do, is they said, what else is on our bucket list, right? Now that we know about CPACE, what else can we get done all at once? And they said, well, okay, if we're replacing the roof, that's a great time to put on solar, right? So they did. They included a 16 kilowatt solar PV system. And they said, we've also always wanted electric vehicle charging stations. So you can see them on the left. Those are the 3 EV charging stations they included in the financing as well. So we've seen a lot of projects like that, where the owner comes to the program with a critical need, something that needs to be replaced, and then it sort of blossoms into all these other great improvements that they want to do to the building. In terms of smaller projects and more rural projects, a big part of what the program's been trying to do is really reach rural Colorado and smaller buildings. And so this is an example, one of our first rural projects. That's Steve Ella. He's an organic farmer in Paonia, which is in Delta County. And so he installed a 26 kilowatt solar PV system on his refrigerated warehouse. It was just over $60,000. He did that it was about 6 years ago. He still is incredibly pleased with the system, and he actually will speak with me every once in a while at certain events. He's a real champion of the program. And when Steve did it, the winery right down the street from him said, oh, we should do that too. So they were our second agricultural project and rural project, just under $65,000. They put in an 18 kilowatt ground mount solar PV system. This was one of our early big projects in Colorado. This was the Fiddler's Green office buildings. Again, they needed to replace all of their rooftop units, and so that's what really brought them to CPACE. But just like that earlier owner I mentioned, they said, what else is on our bucket list? So they hadn't done all the lighting yet, so they converted the rest of the lighting to LEDs. They put in an advanced control system and metering system. They replaced all the plumbing fixtures with low flow plumbing. This was the first one, they did a smart irrigation system. They even included, for those of you that are familiar with the LEED certification, they got LEED for existing buildings. And so that was like a $90,000 cost just to get that LEED certification. And that was considered related and rolled in to the financing. So that was a little over a $7.1 million CPACE project. On the new construction front, this is our first new construction project. This was the Mayfly headquarters building out in Montrose. So David and Doug Dragoo wanted to build a new headquarters building. They manufacture fly fishing equipment. And so they used $1 million in CPACE to help them realize this very efficient, high efficiency design with all sorts of, efficient HVAC equipment. It's got heat recovery on the process equipment. They have an amazing daylighting strategy. You can see all the windows for the office sections up front. So it was a really great first new construction project. A lot of hotels, hospitality, have utilized CPACE. I think we're up to 13 hotels have used CPACE in Colorado. This is an example. This is the pad in Silverthorne. It's a new hostel up there. And I actually tried to stay at it twice now, but they're always booked. I haven't been able, I wanted to check it out from the inside, now that it's built. But anyway, they used $2.8 million in financing. It's an all-electric system. It's got variable refrigerant flow systems, low flow plumbing, really low lighting power densities. A really just a fantastic design that CPACE helped enable. This was one of our other very large projects. This was it was a combination of new construction and retrofitting the existing buildings. So this is the Academy on Mapleton in Boulder, a senior living facility. And so they used just under $30 million, again, to help build these very high efficiency, all electric new construction buildings, and to retrofit a lot of their existing building stock. So really just an outstanding design for this project. This is our new biggest one in Colorado. This is up in Keystone, and it's going to be a new hotel, restaurant, and residences. And they use just over 55 million in terms of financing. And again, a really incredible design. Everything from efficient snow melt systems to heat recovery, the high levels of insulation, all the rest of it. Just an outstanding design. We've had a lot of owners come back to CPACE now again and again. Stu Ogilvie with Ogilvie Properties, he's actually working on his 6th CPACE project. So that's what happens. A lot of owners will get a taste for CPACE, and then once they understand it, they want to use it over and over. And so this is an example of one building he did. He used just over $626,000 to finance new controls, variable frequency drives on all of his motors and fans. He replaced the roof and put in all new lighting. We've had a lot of rehab projects too. So this was a big box retail that had sat vacant for years, and a developer came in and put in this high-end recreational and fitness facility. This was actually during COVID too. So it was sort of like, oh boy, you really want to open a gym during COVID, but they managed through it, and they're actually doing fantastic. But so they used about 1.7 million in CPACE, again, to retrofit the windows, the skylights, all the heating and cooling equipment, and the lighting. I mentioned nonprofit, so here's an example. This is the Forney Museum. They used just under 62,000 to do a lighting retrofit for their museum. This is an amazing museum, by the way, if you've never been. It's got all old trains and motorcycles and that kind of stuff. Kids love it. This is another nonprofit example. This was a senior living facility. They retrofitted their chiller plant and did some of the lighting that they had as well. So that was a $1.9 million CPACE project. Okay, so that should give you a pretty good sense of CPACE and sort of how it's being used. Again, the critical takeaways, what makes CPACE different than other forms of financing is it's 100% financing. There's no out-of-pocket for existing buildings. It's long-term financing, so you can do a finance term up to 25 years, and the payment obligation is transferable. You have the ability to hand off the payment obligation if you were to sell the building down the road. So if you're a contractor and you want to get registered with the program, you can go to the resources section of the website, copace.com, and you can download a contractor registration form, and we'll get you registered. Or if you're an owner or a developer or working with one and they're interested in CPACE, as I mentioned, this is the first step. Go to the resources section and you can download a pre-qualification submission form, send that in to us, and then I'll reach out and we'll get the process starting. There's my contact info. Ken Gallagher works very closely with me. We're your 2 main points of contact in the state of Colorado. So always happy to help and to talk about projects and anything else. So, all right, Lucy, that was it.
All right, awesome. Well, thank you so much, Tracy. We can leave your contact info up on the board, so if anyone wants to copy that down, they can. But I'll also include it in that email that I'm going to send out to all the registrants. So first question, pretty quick one. Just to confirm, multifamily does not include HOAs for this program.
It's not so much HOA or not. It's just, are there 5 or more units? If it's 5 or more units, then it's considered commercial multifamily, so it's eligible. And so, yeah, a lot of those apartment complexes we work with will have an HOA. that needs to sort of help to make the decisions about what improvements they want to do. But it's more the structure of the buildings, not so much whether an HOA is involved or not.
Great. And then are there any cannot be combined with others limitations on combining CPACE with other financing opportunities like CHFA for low-income housing?
Yeah, no, you can mix and match however you want. We have plenty of projects that have used, right, CHFA funding or a USDA grant, like a REAP grant. You know, any other forms of financing can be mixed in with CPACE. I'll tell you, one of the things that usually delays our process is when one of those forms of financing are being pursued, because, you know, the government can take a while. And so, I had a project recently, we were waiting over 6 months for their USDA grant to get approved before we could then close on the CPACE. But yeah, you can mix and match. There's no, you got to use a certain amount of this, that, or the other.
Great. Could CPACE be a form of financing for a government building?
That is a great question. Yes, CPACE is available for public buildings. The trick is TABOR, the Taxpayer Bill of Rights. So TABOR limits a public entity from going into a long-term financing agreement without voter approval, right? And so TABOR can really be an inhibitor to CPACE. Now, that said, I've worked with a number of public buildings and the attorneys, and we've got a form of the financing agreement. It's essentially like a lease purchase format, which we're 99% sure is going to work for public buildings. And so that TABOR won't be triggered. And so I'm actually in the process. I'm working with a city right now. I have a call tomorrow at 3 o'clock to discuss it with them. But hopefully that's going to be our first public building financed in Colorado, that this form of the financing agreement won't be limited by TABOR, so TABOR won't be an issue. So yeah, if you've got a public building, reach out to me. Like I said, I'm 99% sure. In terms of eligibility, they're absolutely eligible. It's just that TABOR issue that we want to make sure we've got figured out.
All right. And then can a high-rise condominium of 77 units qualify for CPACE since each unit owner may have a mortgage lender? Would each mortgage holder have to consent to the loan program?
Yes. So here's the bad news. So any commercial, industrial, agricultural building you can think of is eligible. The one exception that does not work well with CPACE is condominiums, and for exactly the reason they just mentioned. If that building came to me, right, we would have to get mortgage holder consent from 77 different banks, and there's not enough minutes in my life to try to do that. Even if it's 3 or 5 condos, it's almost too much. So yeah, so unfortunately condominiums that's the one building type that's not a good fit for CPACE. Now that said, on new construction, condominiums can be a good fit. CPACE can be used for them. We've actually financed a number of new construction condominium projects. The idea being when they're being built, it's just one owner, right? They haven't been condominiumized yet. And so CPACE can work really well for those projects. And we, like I said, we've done a number of those. But yeah, existing condominiums, it's sort of dead on arrival, unfortunately.
All right. Do office and industrial owners typically pass the assessment cost on to their tenants? And if so, how have they received this extra cost?
Yeah, so that's one of the really great things about CPACE is you have that ability. Because it's an assessment, you can split it up among your tenants however you want. So that's really up to an owner. And yeah, that's what most of them will do, is especially if it's like a triple net lease. You know, usually these kinds of energy efficiency projects, an owner doesn't want to do them because all this utility savings are going to the tenants, right? The tenants are paying the utility bills. The owner is investing all the money. The tenants get the savings. So there's that really split incentive, they call it, problem. So with CPACE, because the tenants getting the utility savings, but they're also making their portion of the payments on property taxes. So right, the owner can spread out the CPACE assessment, the payments to the different tenants, however much they want. They can negotiate that with the tenants however they want, but they can split it up so that the tenant is paying their portion of the CPACE payment and receiving, of course, their portion of the utility savings. So it's a terrific way for an owner to pass on that payment obligation to their tenants, and it could be structured however they want.
All right. Is there any effort or interest in expanding the program to be able to provide financing for the cannabis industry? Lots of efficiency potential there with HVAC and lighting.
Yeah, in my former life as an energy consultant, I used to work with a lot of cannabis operations, and yes, they are energy hogs, and there's tons of opportunity for savings. So I couldn't agree more. So what hamstrings the program there is that I mentioned the Colorado Energy Office is our sponsoring agency, and they receive federal dollars. And so as long as the Energy Office receives federal dollars, then they can't have anything to do with cannabis. So it's really that's the roadblock. And so yeah, until the federal government approves cannabis, I don't think CPACE can ever be applied here in Colorado to cannabis operations, unfortunately. That said, hemp is just fine, or CBD derived from hemp is also just fine. So bring on your hemp projects.
All right. And what about a new master planned community? Could a developer put in geothermal heating and cooling loops using CPACE if they're developing the land, but not necessarily building homes, retail, or commercial?
Yeah, so the CPACE needs to be attached to real property. So I need a building, I need a structure on the property where the improvements are going to be done in order for CPACE to be used. So like, yeah, if you did like a solar garden, right, out in a field somewhere, and there's no building on that field, you can't use CPACE for that. I need a real property. I need a building on the property. And as I mentioned too, the building is what is one of the primary things that underwrites the financing. So the building has to have some value. I can't have a little pump shed, and then a $400,000 solar PV system being underwritten by a $200 pump shed or something. I need a building that could help underwrite, substantiate the investment on that land.
All right. Is CPACE considering limitations on gas for new construction or for all projects?
Yeah, I think what they're talking about there is electrification, right? Is that Lucy? Yeah, okay, right. And so, yeah, so we actually addressed that a couple of years ago in terms of beneficial electrification and the eligibility of those projects. And so, yeah, beneficial electrification projects are eligible, converting a building to all electric. Now, here's the reality, and the challenge in Colorado is that we pay very cheap electricity costs, believe it or not, in terms of consumption, but incredibly high demand charges in Colorado for electricity. And we have very cheap, again, relatively speaking, gas. So if I'm switching from cheap gas to very expensive electricity demand to do my heating in a building, there's not going to be a very good return on investment for those types of projects, right? I mean, that's just the reality of electrification projects. So even if they can just break even, then it's great. But the way CPACE has approached it is, okay, it's a utility cost savings the project has to show. All right, so if you have an electrification project and it shows a utility cost savings, switching from gas to electric, it's more efficient heat pumps and all of that, but cheaper gas, so there's that trade-off. But yeah, if it shows a positive cash flow, then you're good, then it's eligible. Even if it doesn't show a positive cash flow, if you can combine it with other improvements on the building so that the overall project shows a positive cash flow, then it's eligible. So if I have a electrification project I want to do and I couple that with lighting, which has a terrific return on investment, and the overall project has a positive cash flow, then it's eligible. So the programs try to do everything it can to support electrification projects. And as you saw, we've had a number of projects do all electric systems. So it's been pretty exciting to see it applied that way.
Yeah, and I'm sure that will also change as technology becomes less expensive and gas becomes more expensive and all that.
Yep.
All right, awesome. So that was it. We had, that was all the questions that we had. If anyone has any others, feel free to throw them in the chat real quick, or in the Q&A box. But other than that, you can reach out to myself. You can reach out to Tracy, and ask those questions if you have any follow-ups. But thank you so much to everybody who joined us. I'll let you have 4 minutes back to your day, and we'll go ahead and wrap up.
All right. Thanks, Lucy. Thanks, everybody.
Thank you so much, Tracy. Have a good day,
All right.
everyone.
Bye.